Hey, my name's James Wilkinson. Welcome to my YouTube channel. Now, in this video, we're going to talk about, has property started to crash? Are we in a crash? And what do we expect for 2023? So make sure you stick around to the end. Now, this channel is all about my investment journey. And I built this channel to hold myself accountable while I'm building a portfolio for my two daughters, Georgia and Amelie, and to share with you guys what you can do to make some money in property in 2023 and beyond. So while you're here, take that finger of power, smash that subscribe button over there and hit the bell notification. We've got new content every single day. We're at 4,000 subscribers now. We're on the journey to 5,000 subscribers. So help us get there by subscribing right now. Now, look, the market's been very volatile in the last few years, and it's been actually rising at record rates in the last 2 years, which has been great for property investors and homeowners alike. But obviously, in the last few months, things have changed, haven't they? We've got really high inflation. And while we expect that to drop significantly this year, it's not budging right now. In fact, it went down 0.1%, I think, last month on those figures. And so that's really frustrating. And it means that the Bank of England has got to raise interest rates. And what that means is things are more expensive. And it also means that you can afford less when you go to buy a property. So think of first-time buyers or people looking to move. If their monthly payments are higher, then obviously they're able to borrow less money, which means that if they want to buy a 500 grand house that they could have last year, maybe now they can only offer 450. And so now they have a choice. Do they offer 450 on the 500 grand house, or do they look for a smaller property? And these are considerations that will impact house prices this year. And so the government have really not helped. And so we had that mini budget that caused absolute chaos at the end of last year. We've had money printing at a record rate, which got us through the pandemic, which was kind of important that we got as many people through that with jobs and businesses surviving, but now we're paying the price. And that is higher inflation. Obviously, war in Ukraine doesn't help with energy prices easier, and that stuff impacts us all significantly. And so in the last 4 or 5 months, we've had back-to-back house price drops. And so they have been, some of them have been fairly low, where we've had that it's been less than 1% in a month. But one of the months, it was more than 2.5%, the drop. That's significant. And if you carried that on for 1 year, that is going to be a huge impact on homeowners in the UK. And so right now, are the prices crashing? Well, no, they're not crashing right now. And so a crash is anything over 10% in a year. We're going to get very close to that this year, though, and maybe even exceed that. So we have had a slowdown in price drops. So this last month, the prices went down, I think, 0.1%. So almost nothing, but it is a significant thing. Now, house price data lags massively. And so you think about this, when you go to buy a house, it takes you 5-6 months to actually complete on that transaction, doesn't it? And so data that we're seeing today is from people that bought last summer. In fact, even slightly before. Some of those transactions will be before that mini budget, and they'll be before 4 or 5 recent interest rate rises as well. And so we're not really going to see the true impact on what's happening until spring, summer 2023. Now, what is interesting is in January, new listings that went on Rightmove, people were asking more than they were in December. So the asking prices went up. Now, what does that indicate? Well, what it indicates to us is that people aren't desperate to sell right now. Some people will be, of course, depending on their personal circumstances. But the market as a whole, there is not lots of desperate sellers out there. And so what I've been saying is that I believe that prices are going to continue to drop through this year. I think 8 to 10% realistic in 2023. We'll see a downturn. But what I do see is that it will be at the back end of the year. Because if people aren't desperate today, it's going to take a while for them to get desperate, put that property on the market, see there's less interest in that property, and then they've got to make that decision, and they might edge it down 1 or 2% or a few grand here to try and kick things off. And then it might take another month before they go down 5% and another month before they go down 10%. It will take some time to filter through. And those transactions, if they agree to sell in March or April, we're not going to see those till right at the end of this year in the data. And so I just think that it's going to be more prolonged, this downturn, than people think. But I'm hoping, and I could be wrong, that it might be slightly less. Now, here's some positive things that mean the market won't go down as much as it could have. Now, when we had the mini budget, we were expecting base rate, the Bank of England's interest rate, to be 6.5%. Now, that turned out that with a new Prime Minister and a bit more of a plan, that's less likely to happen now. And we're hoping that base rates are going to peak out at 4.25 or 4.5%, meaning we'll pay a little bit above that. Also, the government brought back in the mortgage guarantee scheme. That's going to help some first-time buyers. Now, I know lots of people will say that on that scheme you get a slightly worse rate. It's not the best scheme out there, but it's better to have that scheme in and help some people than not have that scheme at all. And that will get some transactions going. We're also seeing mortgage lenders that are doing deals below base rate. So Virgin and HSBC have rates today that are at 3.99% if you fix for 5 years or 10 years, indicating that they believe that the rates longer term are going to be lower than they are today, which is a good positive sign as well. And so there are things that are going to impact this market significantly. The recession, if that finally comes through, if it goes long, that will obviously impact jobs. That's going to be a real bad thing for property prices. So potentially if we get a worse recession than we're being talked about, we've said, the Bank of England have said a long recession, but a shallow recession. If they're wrong on that, which they are often wrong, then if that goes deeper than we were expecting, that's going to hit the property market. That's going to hit employment markets as well. And so there's lots of different factors there that are going to cause people problems. Now, investors is really who we're talking to on this channel here. And so there are lots of people saying, should you wait? Well, there are different strategies out there that you could be using right now. You could be using a rent-to-rent strategy where you rent the property and then you make an income that way. You could be using the buy, refurbish, refinance, rent strategy where you buy below market value. And there are deals out there already that are significantly lower. Look at auctions up north and you'll see there are discounts in that market already. And so if you can buy a property, you can renovate it, you can add value, then I would continue to invest. Through 2008, 2009, 2010, lots of people carried on investing and they came out really, really successful off the back of that. However, certain deals I don't think will work. So I think if you were to buy a property and you were looking to buy a new build property, I think that could be quite risky at the moment. Those prices could go down. You can't add any value, so you've got no control over that whatsoever. I think those sorts of deals might be something that I would pause. I don't actually do those deals myself, but if you were considering buying new build, I would wait and see what happens in the market because you might pick up a better deal at the end of this year. But if you're looking where you can buy a 1-bedroom flat, turn that into a 2-bedroom flat, or take a dilapidated property, redo the kitchen, redo the bathroom, I think those deals work all day long. But I'd also consider adding high cash flow strategies on the back end of that as well. So what I mean by that is to look at renting those properties out as an HMO, house of multiple occupancy. If you do that kind of strategy, your cash flow is going to be higher. You're going to be more protected from interest rate rises and the market won't hit you so hard. Or serviced accommodation, another high cash flow strategy that I also think could work quite well. Vanilla buy-to-lets, they are going to be tough in 2023. Some of you will say that in the comments. Yeah, if you're making 200 quid, there's not enough margin in there to protect yourself. But if you buy an HMO and you're making £1,000 a month, you're going to be way more likely to do really, really well this year. So those are the things that I would be looking at. But what do you think? I'd love to know your opinion on that. I'm sticking my neck out there. I'm sticking with my prediction of 8 to 10% down this year. I could be totally wrong. totally wrong. I'm not Mystic Meg. You're not Mystic Meg. Some of you are saying 50% down. Some of you are saying 30% down. Some of you are saying it's just going to level off this year. No one knows for sure, but let me know what you think in the comments below. Do like this video, guys. That really helps with YouTube. And if you want to learn how to buy a house for £1 with something called an option, then I've made a video on that. Go and check out that video right now and watch that.